This is my account. 18 days, $3,000 in profit. Challenge passed. Now you might be asking, okay, but how did you do it? Is it just luck? Is it a secret strategy? Or is there some tricks? None of that. I followed 3 steps, and in this video, I'll show you all of them so you can do exactly the same thing on your next challenge. But first, you need to understand one thing. The reason you blow challenges often has nothing to do with how good you are at trading. 90% of traders blow the challenge before even opening a single trade, not because they trade badly, but because they made the wrong choice. Let me explain better. Have you ever entered in a trade, seen the price moving in your direction, but the drawdown moves with you and kicks you out at the first pullback? Well, that's not the market betraying you. It's the prop firm you choose. There are 3 things almost nobody fully understands before buying an account. 1. The type of drawdown. There are prop firms with a drawdown calculated at the end of the day, the so-called end of day, and prop firm with a drawdown that moves with your profits, even if unrealized. So even if the trade is still open. This is called intraday, and it's the worst one by far. End of day, on the other hand, gives you breathing room, letting you manage trades without having to close them at the first pullback. The consistency rule. Look for accounts where no single profitable day can exceed 40% or more of the total profits you made. If you don't know what the consistency rule is, subscribe and I'll make a video about it. But for now, look for the consistency rule when you're buying an account and make sure it's above 40%. It might seem like just a nuisance, but it's the rule that forces you to trade sustainably and will save you even in the funded phase. If this rule doesn't exist, even better. 3. The ratio between profit target and max drawdown. If to pass the challenge you need to make 5,000 in profit target, but you can only lose 2,000, there's a problem. Look for a ratio of at least 1.5 or lower. So if the profit target is 3,000, aim for a max loss of at least 2,000. You can calculate it yourself. Divide the profit target by the max loss, and if the result is greater than 1.5, it's probably a trap. Now let's see how I managed it instead. I chose the Lucid Trading account 50K, the Lucid Flex plan. The drawdown is end of day. The max loss to profit target ratio is balanced and the rules are fairly clear. If you want to use it too, I'll leave the link in the description along with a code for the maximum possible discount. But choosing the right prop firm only gives you the entry ticket, because 90% of those with the right account still blow everything. Why? Because they get one extremely important element wrong, which is everyone thinks you need a winning strategy, and that's the mindset that's making you blow every challenge. Because the problem is not finding a strategy. Let me explain better. Most traders make mistakes in 3 ways. First mistake, thinking that the strategy only tells you where and when to enter is wrong. A real strategy also tells you where and when to exit. Without a clear exit, even the best setup becomes a loss. Second mistake, one of the most underrated, knowing when not to enter. That is the ability to stay out of the market, and this is a skill you have to learn it. And it's the difference between those who survive and those who blow up their account on the first tough day. Third mistake, not having a market reading method that works in different contexts. The market changes every day and your strategy must adapt. Now, at the beginning, I showed you the numbers. 18 days, $3,000, but numbers without context are useless. What matters is understanding why they work. And there's still one piece missing here. I work with a strategy based on order flow. So I start from long term analysis with the TPO, going down to micro order flow with Delta. This allows me to understand where the market is heading in a broad strokes and what it's doing right now, allowing me to use statistics to my advantage. And on days when I don't see clear setup, I don't enter. There are entire days in my challenge without a single trade, and those days save your account. Of course, I explain this entire system in detail. Just check the link in the description, it's free. But having the right prop firm and the right strategy still isn't enough. Because there's a third mistake that destroys more challenge than all the others combined. How many times have you done it? Do you think increasing your size increase the speed at which you pass? If you think that, you're about to blow another account. Because what I'm about to tell you is the exact opposite of what 90% of traders do. Have you ever woken up thinking today is the perfect day? I'll open 10 contracts and flip it. I can feel it. That is exactly the day you'll destroy the challenge. More sides means more volatility on the equity. It means more emotional drawdown, more probability of violating the max loss in a single trade. And also, a good strategy doesn't mean many entries. It means few entries, but the right ones. Less quantity, more quality. Now, the technique I use is called the daily bag, meaning I start the day with small sizes. I bid a small cushion with that profit. Now that cushion became my bag for the day. Only at that point do I increase sizes because now I'm no longer risking my drawdown or my account capital, but I'm risking the day's profits. Result? My downside is always protected, and when the right setup comes along, I have the freedom to increase my sizes without compromising the maximum risk for the day. On my challenge, this translated into this. Most days are small or average gains and small or average losses. But some days, thanks to the daily bag, there are explosions of real profits. 18 days of trading, 20% consistency, 3,000 total profit, challenge passed. Now, you know how I choose the prop firm, how I built my strategy, and how I manage risk day by day with the daily bag. But there's one piece I couldn't go deeper on here. The exact way I read the market with order flow. And you'll find that in the description. So leave a like, subscribe to the channel, and see you in the next video. Goodbye.